Hello, Maverick Currency traders. This is Rob Reinhold. I'm joined by Mr. Anka Sharma. This is the Currency Room. We are moving into the third week of November. And boy, we've got some pretty interesting markets, so let's just jump right into it. In this session, we're going to be going through the news of the week, talking about what's going on in the broad markets, commodity markets. And then, of course, we look at all of our currencies top to bottom with our baskets and score them +3 to -3. And then we're pairing up the strongest versus the weakest, and that's where we're going to go hunt for our trades.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the Apply button in the video description. Let's get ready for next week.
All right, so let's talk first about the big news, the big sell-off in equities at the end of the week. So equities were having a little bit of a pullback, and it was an orderly pullback. So when equities make new highs and they run, they might run for 5 days and pull back for 3. They might run for 3% and pull back for 1%. We were having a very, very orderly sell-off until Thursday and Friday. And then all of a sudden, the sell-off gathered a lot more momentum and a lot more velocity. And now we're actually breaking through some pretty key technical areas. We'll take a look at that. So the bullishness that I had just last week, I've got to be dialing that back because this is not a normal style pullback. We saw yields on all the bonds go higher. We saw the US dollar continue to go higher. This is the 7th consecutive weekly gain, longest run since 2022. As Ankit said last week, this has just been a dollar story. Ever since the election, you can pretty much forget about all the other currencies. No one really cares about them. Now look, they're still moving, but the reason they're moving is in relation to what the dollar is doing. And really, the action has all been in dollar yen. We're going to be talking about that. That's where the action's been, a little bit in euro dollar. But outside of that, there's been very little action because everyone's watching the US right now. And we got a big breakout from Bitcoin, great breakout. I know I was in it. We had some traders in it. Great run up to 90,000. So we got some new levels to talk about there. Let's go through some of the key economic reports from last week. On Tuesday, we had the claimant count change. So the claimant count change out of the UK was better than expected. Okay, so the pound should have done better, right? It did not. It did not. We had weaker wages out of Aussie, so the Aussie should have fell, right? No, it didn't. None of them really did anything. It's because, again, the story is on the US dollar. That is where all the focus is at the moment. We got the CPI out of the US, came in right in line with expectations. And then we got the PPI, came right in line with expectations. So inflation is exactly where the Fed wants it to be. So that should be really good news, right? Here's the problem. That news came out. The equity market actually went down on Tuesday. We have a saying here at Maverick, we use the term sentiment. It's not the right word, but it's the closest word we can figure out. Meaning that when good news comes out and it doesn't go higher, whatever it is, if good news comes out on the Aussie and the Aussie doesn't go higher, that's a sign that it wants to go lower. So we just saw like the UK claimant count change. Great, it was good news. The pound should have gone higher. It didn't. We got weak wages in Australia. The Aussie should have gone lower. It didn't. These are all signs to, hey, don't expect there to be the price action that maybe you thought. So on Wednesday and Thursday, when we got the CPI and PPI within expectations and the market fell, it's a sign telling you the market wants to fall a little bit further. Wednesday night, we got the employment report out of Australia, and that also confirmed weak employment. So again, the Aussie should have fallen. Guess what? It didn't really fall anywhere this week. And then let's wrap this up here. On Friday, we had two measures. We had weak GDP out of the UK. So again, we got the better than expected employment report. No one cheered on it. We got the weaker than expected GDP, and it sold off. It got punished. So that's telling us, okay, pound that we really had on more of the strong currency side It didn't go up on good news and it went down on bad news. It does want to go down. And U.S. retail sales were a mixed bag. The headline number was higher than expected. The core number was lower than expected. So let's just call that an as expected wash. So what did that mean for the markets? Let's take a look at the numbers. As far as equities go, we got a pretty big sell-off in equities. And as I said, it happened really on the last 2 days of the week. S&P plunged 2.5%. Look at the Qs. Qs down 4%. That's a big fall here for 1 week. Gold, oil, just got absolutely crushed. So a lot of things getting sold off, except for crypto. Crypto had a great week. I've been talking about building a position in Bitcoin over the last couple weeks, and it was a very nice trade. Crypto's acted very nice because it is viewed that the new Trump administration is going to be very friendly to cryptocurrency and having more laws and adoptions of it. So crypto looks really good here, but as I've said earlier, I'm just a big Bitcoin stan. All I care about is Bitcoin. I don't care about any of the others. And we'll see that the others didn't go up this week. Bitcoin was the story. Looking at the S&P, and I want to focus on one thing. I want to focus on velocity. So whenever we talk about velocity, it's basically the speed at which it goes, or the speed of the change of momentum. And we got this huge rally here. And look at this. Look at these candles. This is just huge velocity. Now, when you get velocity like this, it usually lasts a little bit more. You could see we had 3 more days where we actually it was just from momentum. It was just from the movement, pushing it higher. There wasn't real huge amounts of buying, but it was that momentum. And then, as I said, we had a really orderly sell-off the first 3 days of the week. There was nothing to be concerned with. I actually said, hey, it looked like we're going to base. We could pull all the way back to 5,800 or 5,880, but I thought we were going to base. And then Thursday said, you know what, I'm going to do my own thing. And look at this velocity here. We've got a lot of velocity to the downside. We are at a 20-day moving average. We are at a level of support. I fully understand that. But when you get this kind of velocity, it's got some momentum behind it. Even if it wanted to stop, it's got a lot of velocity. It's like trying to stop a car. You know, the car let off the gas, but it's still going to travel because of that momentum. I think we're going to get this here as well. So what am I looking at as far as levels go? I'm looking at this 50-day moving average saying that's probably about where it goes. So I'm looking at like 57.80 on the S&P. If you take a look at the NASDAQ chart, it's looking even worse. Ankit, what is your call here on equities?
Hey, Rob, but I'm on the same boat as you. I'm definitely more cautious here because, again, the entire story, if you look at the last maybe week or two, is, this whole big rally that we saw, and we talked about, the end of the year rally. That's what everybody started preparing for. So I think this is definitely getting a lot of traders off guard, where you're going from end of the year rally now to this big pullback. So question is going to be, are the buyers going to come in on this pullback, or do we start to see more selling because everybody start to book some gains? To whoever had big gains on that election, they start to book those gains. So I think the next the outlook for the next few weeks looks a bit murky. I don't think this could be the highs. We could just pull back a little bit. Remember, we still had a very stellar year. So even if we sell off year, it's still going to close on a very strong note for the year. So I think market could be in a little bit of a jeopardy in the next week or two. So I think that's the outlook here is, watch out for the next 2 weeks and see then where we go from there. And again, if we break the key support level, which is, again, we saw that support acted at nicely in early November, that 52 moving average. Now we're going to have the exact same thing. If we give back that level, that's the next level of a defense. Now, if that level gives up, I think then we have a lot more of a downside risk in the markets here, which is, again, giving back some of the gains that we had this year. So overall, I think that's where we are at in the markets.
Thanks, Ankit. And I would agree with you. I'm looking at next week actually being the more dangerous of the week. After that, we move into Thanksgiving week. And Thanksgiving week has a pretty strong bullish bias. So I could see us having some nastiness next week and then bottoming out. Maybe we pierce below that 50 for a day or two. And then I can see us having a kind of a holiday rally when everyone's gone and it's a little bit lighter mood. Have a little bit of bounce there. And then when we come back in December, then I think we get either the continuation higher or we get the breakdown lower. Looking at what happened in the world of Forex. And you can see, as I said earlier, this has been a complete story about the US dollar. A complete story. Everything else is moving, but it's not moving off of the story of their country and the story of their economy and the story of their inflation. It's being whipped about by the gyrations in the dollar. And I don't see a lot of rhyme or reason outside of anything other than this pound. This pound didn't rally with good employment news, and it sold off on the miss of GDP. So I wanted to go in and take a look at the pound on a chart and see, is this a shorting opportunity on pound? Aussie and Kiwi were relatively weak to everything else, which they should be in a risk-off environment, but down 0.5%, down 0.3%. That's not a big move down when you take a look at how big the equities have moved. The other little story here is yen. If we get more selling, if we get more panic in these markets, you got to be watching yen and Swiss franc. Yen and Swiss franc are likely to strengthen if we do see further selling in equities. As I said on crypto, I have been all about Bitcoin, and I've said, look, if it's not Bitcoin, it'll be Litecoin, but it's not going to be not Bitcoin, so you don't even have to look at Litecoin either. Up 11.5%, up to new all-time highs. Ethereum, lagging. Completely lagging, and we've been calling that lag for a long time here. It's not just the last week. It's been the last 6 months to a year that Ethereum has been lagging. All right, so let's go in and get our new market analysis. Let's go in and get some scores, and let's go break down every single currency that we look to trade and score it +3 to -3. We are giving this market a score of 1.5. Now look, as these markets move, you go from a 0 to a +1 to a +2 to a +3, and then you back off to a +2 and then to a +1, and then you go maybe a fast move down from a +1 to a -1 or a -2. So just because it's like at a 0 doesn't necessarily mean that it is flat. 0 could just be a stop on the way to a -3 or a +3. So we had been at a +3 with the new all-time highs. We're backing it off to a 1.5, and we're doing that because that's where the market and the technicals are. So we are at the 20-day moving average. We're above the 50, and the 2050 slope is still more bullish than bearish, but it's not as bullish as it has. You can see we're starting to flatten out on that 20 MA. So look, if we sell off any more, we're going to be going down to a +1 to a 0. If it does break below that 50-day moving average, then we'll start to go down into the -1s, -2s. So I think that, yes, this market score of 1.5, it correctly reflects where we are at the moment. But I think in 3 days, we'll be somewhere different. So don't get too stuck up on this 1.5 score. It's just simply a measure of where we are at the moment. Here are the 10-year yields on U.S. government bonds. And you can see we've been going higher. However, since the actual bottom here, you can see that it's getting a little bit harder to go higher. It's getting a little bit harder. We're now kind of stuck in this range, 425 up to 445. And we tried to have a breakout today, and we didn't. Ultimately, I think these yields stay up here. Do these yields go higher? I don't think they're going to go higher anytime soon. Remember, if the markets are holding in okay, these yields will hold in okay. If we do get a break in the 50-day moving average, then I think we could see possibly a reversal in these bond yields. But for me right here, I'm seeing these as probably going to stick in this area. Ankit, what do you think?
Yeah, I would agree. If you just take a look at the cycle of this, this trade, the bond yields in the dollar, this is kind of running into the 7 weeks here. So, this is today's price action definitely was a bit more of a sign of exhaustion. And I think if we start to see a bit more risk off, and this today price action was pretty good example that we didn't see the yields rally, we didn't see the dollar rally. That was not the play here. So I think if we get a little bit more worried about what the market's going to do, I think we're going to see maybe the yields come back, and then even the dollar. It seems like dollar is very much tied up to the yields instead of the risk on and risk off sentiment, because here we are, we had a nasty sell off in the equities, and then we saw the dollar pull back too. So we're seeing that disconnect a little bit there. But I think this is today's price action. We got to watch and see if there's a continuation to it. But yeah, it's showing me a bit of a sign of exhaustion in the short term.
All right, and let's take a look at the cryptos. And actually, this is the crypto basket. And look, Bitcoin's such a big part of this basket. Let's just look at the cryptos individually. So I'm just going to skip through this. Let's go to what's going to be on the schedule for next week for economic reports. If you are trading the CAD, we've got Canadian CPI on Tuesday. If you're not trading the CAD, you probably don't really need to watch it. I'm actually really intrigued on this pound. The pound is in my targets here for a potential short. It's got CPI over here. If this CPI is less than expected, I think that's another nail in the coffin against the pound, because we had that lower GDP. We didn't run on the higher employment report. This one I'm actually watching for a trade here. Other than that, I don't see a whole bunch. I mean, we've got some PMIs out of Europe. We got retail sales out of the UK, Canadian retail sales. I just don't see anything that's going to really change the story right now of what is the U.S. doing, what is the U.S. dollar and yields doing, and what is going to happen with this new administration. So we both agree the markets are likely to extend the weakness. A little bit of a risk-off sentiment, especially early in the week. I could see later in the week us finding a bottom and setting us up for a decent bounce in a holiday weekend the week after. All right, let's go in and score everything. This is my favorite part. Go in, score everything. It tells us where we're going to be hunting for trades. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? All right, I've been very clear that Bitcoin is my play. Absolutely big break higher. We talked about accumulating it in this area, ready for this breakout. Got the breakout, and boy, nice run. Okay, so here we are. We're basing. That's what this is. We're basing. Can we break higher? Yes, we can. I'm going to be very cautious on these upper wicks. If you take a look here, we've had upper wicks on both of these days that were, new highs, and then it sunk back down. I think we need more time to consolidate. This was a monster run. I mean, just on percentages alone, we're talking like a 30% run here. So look, I like Bitcoin. I like it going higher, but any trade I take on it is going to be shorter term in nature than the ones I was taking down here. Again, I was accumulating for the breakout. This one here, we've already had the big 30% breakout. Any trades I take here, I think they've got to be really quick in nature, where you can get in, maybe get 1,000 points, and then you get out. Because I don't see another big, huge run like we saw here. I just don't see that happening until we consolidate. So for me, I like Bitcoin. I like Bitcoin on breakouts. I also think you can buy it on pullbacks, but I think you've got to be shorter term in nature on this. And we'll take a look at the Bitcoin chart specifically for entry points. Other than that, why would I play anywhere else? Bitcoin Cash? Nope. No thanks. Ethereum? Yes, I had a breakout, but It's been underperforming wildly. And look at this pullback. I mean, that's just a nasty pullback. We're getting huge selling after a new run. At least Bitcoin isn't getting selling, it's just getting a base. People are tired. And Litecoin, as I said for the last 2 weeks, if it's not Bitcoin, it's got to be Litecoin. Litecoin looks pretty good. It's just, I'm going to be trading Bitcoin because it just looks better. So if any of my traders said, Rob, I'd rather play Litecoin, you know what? Have at it. It actually looks pretty decent here at the moment. Okay, will you take us through Forex?
Absolutely. Well, let's just start with the good almighty dollar here. Again, look at this trade, and I know I've been highlighting it for the last few weeks, and we went into the last week. We ran to that key resistance, which I was kind of careful for, and then here we go. We got a 5 day run now to the next highs there. Now that high is more significant because that's the high that we had last year in November. That's the high that we had early this year. And you can see that we are rejecting off that level as well. So I think this level is key, but just realize that, in the price cycle, this is a seventh weekly run. We could see some sign of exhaustion. And then that's exactly what I'm looking for. Again, if this comes out next week and just takes off, then, scratch that. And we might have another week of run here. But if he just really stalls here, meaning that it doesn't break to that high above that area, I think then that's where we can see the dollar trade sort of take a pause here. But as the dollar take a pause here, I think that would be an interesting trade because then we could see other currencies sort of participate. Just like today, dollar is the one that's pulling back, but then we had huge move in yen and even the Swiss franc. So I think that's where we need to start focusing on, especially as Rob said, if next week we go in and we go in with the risk off, sentiment as we're going in. I think this out on the daily chart, you can see we are right up against that resistance. Now the trend score is getting a little better, but we can definitely get close towards that 50-day moving average. Again, this fits right in there as we talk about the risk on and risk off sentiment. This is where the sentiment is catching up on it. And you can see the velocity today was pretty strong, +3. And you can see that the velocity today, this big move really came off that sell off in the markets. So this is where it's telling you that if I've got to go for a risk off trade, it's not the dollar. It's gonna be the yen here. Now the Swiss franc is also another currency that takes part in that rally, but you can see that Swiss franc is not as strong. So I think if I have to look at comparison, yen again goes on the top of the list. Lately, we have seen Swiss franc being very strong, but I'm not seeing that right now. So I think Swiss franc probably the better play here. Overall, you can see that Swiss franc is in a giant sideways play for the most part. So don't really have a strong call on the Swiss franc here until we really break that key support resistance level. I think that's where it's only going to get interesting. And comparing Swiss franc to the euro, which is again another currency that has taken quite a bit of hit. Again, that one looks like a better short to me. So this thing is consolidating right at the support area. And then take a look at the wicks that we're getting here. Now, this is again a good sign, especially if you're looking for sort of a next leg down. I think this is setting up nicely for it. Remember, if you look back, a lot of the currencies done really well this year. Euro has held in, pound has held in. I think as the moves start to diverge from other, from the dollar pairs to other currencies, I think some of these currencies definitely has more reasons to move. So I'm watching the euro here for the break, but you can see the velocity is not there. So until we see a pickup in velocity to the downside, I think we can maybe move our focus to the British pound. And as Rob said, pound looks like more in trouble, but lately we pound has actually held in much better. You can see every time it pulls back, it rallies. Now it's actually giving up some key support area. I don't recall last time we had a -2 on pound. Now this is significant. Now you can see that even though if we continue pulling back further, in a normal correction pattern, we can go towards that September lows, which is again a nice little move down as well. So I think the next move in this currency pair or in the pound is going to be on the downside. And take a look at the velocity today; it's a -3. So this is I definitely like pound more over the euro here. I think euro had a big move, but I think the pound could be next. Now, if we go into some of the growth currencies, CAD is the one that I had a lot of questions on, and it was a confusing trade because we would take a look at pound and the dollar against the CAD sort of a correlation. And CAD is not really caught up on that whole big run that we saw in the dollar. And then here we are, we had a nice breakout on this currency basket, and then we just fell back. So the last 2 days, CAD was almost, weak. It didn't really participate in any of that rally with the dollar. So you can see that the trend score is +2, but then the velocity is -3. It's a very mixed score here. So I have no strong opinion on this one. I'm going to shelf this one. I think there are better currencies to be trading out there. But we have the CAD CPI next week, and if that CPI picks up, just like how we saw in the U.S., we saw a bit of a tick up in that inflation number. I think there's a reason for CAD to sort of buy off this pullback. So this support level, I'll be closely watching. If this falls back within the range, then again, I'm not interested anymore. But if it holds this level, then perhaps we can take a look at buying that pullback here. Now let's go to the Aussie and Kiwi. And just like Rob said, like this, if you take a look at grand scheme of things, we are not seeing big breaks in currencies like the Aussie or even the Kiwi. Yeah, they have come down, but they've come down to sort of the range lows. You can see where we were back in September. Like we are not even close to it. So we are not really seeing, more of that weakness across in other currencies. Now, would that change? And I think that's where you got to draw the line and say, well, that's a support area. If it gives up that support, I think then these trades could really pick up as well. But again, if you just go with what we are seeing right now, I'm not as enthusiastic about, even though the trend score is a -2. I'm not as enthusiastic about these Aussie and velocities. You can see is a -3, but percentage-wise, it's still a very relatively small mover. Compared to take a look at dollar currency basket. Now that's a big percentage mover. We were up like 1.5% this week. So I think that's where you got to focus on that. This is a dollar story, and now if the dollar story moves to another currency, now that becomes that currency story. So we are just following, whatever is moving play, and then pair that accordingly. And then here we are with the Kiwi, in a week like this where the equity markets, rallied last week or last 2 weeks, and then now plunging. You can see that has no impact, a significant impact on this Kiwi currency basket here. So what is it telling you? That Kiwi is not really what's in play. So they are, again, when we talk about correlation, they're the one that should be going down the most. But again, they were not the one that were going up the most. So they're just telling you that they're not in play. So as we summarize, going to next week, our focus is going to be on the next currency in play. If the dollar takes a pause, then I think the yen looks like a better shot over here. And if these key levels that get broken, and I would love to just set the alerts on these currency baskets. If any of these levels start to break, now that would be a signal that, that's the next currency that's breaking down. But that's not the case right now.
Thanks, Ankit. So let's stack these all up and see where they land. So we do have a good amount of trend scores above +2 or below -2. And that's what we always look at for a good market. So taking a look at this, it says, okay, it's a good market. But when you really start to dissect it, we're not really interested in these three. We are interested in Bitcoin. The dollar's had a huge run. It's up against major resistance. The CAD is pulling back, might bounce, but we don't really have a signal yet. So even though we've got 7 over here, really Bitcoin's the only one that's interesting right here at the moment. We got the same thing on the downside. Ankit just talked about how, yes, Aussie and Kiwi are weakening, but they're not weakening at a very fast level. They're losing 0.2% a day. The only thing that's interesting to me is pound. Pound to me is the most interesting Forex trade out there on the short side. And the question is, what do we pair it against? Well, if it's a weak market, I think it's yen. If it's a strong market, so let's say the market bounces, then I think you could probably take a look at it against the CAD. I think that is probably the trade. And as far as the velocity goes, what's moving right now, the pound is moving to the downside and the yen is moving to the upside, which makes that one of the best trades to look at. So let's go ahead and look at that cross. Let's take a look at that pound-yen cross and see if there's a possible entry point here. All right, so checking out pound-yen. So here's a daily chart. If we go back and see where we are, we had this clear trend here, clear trend here. Here we've had this trend, and the question is, are we reversing this trend? We just had this trend go from 184 all the way up to 200. So that's an 8% run. You can see we backed off. It looked like we were basing, but we made some lower highs. And you can see now we're breaking here. So the next level we want to take a look at is right here in this, I'm going to say this 192 to 193 area. I think that's the area it's going to. And at 194.70, hey, that's enough meat on the bone. That's 170 pips here on this trade. So I want to go down into the 4-hour chart and really start to talk about entry points. We just got that break. It's probably a little bit overextended here. We're getting a long lower shadow. Would love to see a bounce back into this 196 area. This 195.50 to 196 area for me would be a great place to look, because we should have some overhead resistance up here at the 196.70 area. So this is where I want to just be hanging out here. I want to just be waiting for a bounce into this area. If we don't bounce into this area, then we're probably looking at more of a low base situation, which then I would be hanging out at this low. If we break this low, I'm going to go ahead and take another position, or take a position here for the move down into the 193 area. So again, that would be 120 pips. Not as big of a trade if we got a bear rally, but still a decent trade. This is my favorite trade. The second trade I want to take a look at before I turn it over to Ankit is Bitcoin. So we talked about how Bitcoin is high basing here. So we're high basing. No real reason to pull out a daily chart because we already know there's nothing above this. There's no resistance. We could go back for the whole history of Bitcoin and never find a resistance point. So at this point, it's trading at all-time highs. As you can see on a daily chart, we're basing. This is clear basing action. So if we go into the 4-hour chart, the big question is, where are our entry points here? On bases, I like 2 entry points. It's either the breakout point, which is going to be 93,000, somewhere around there. I'll get an exact point here in a second. Or I also like starting to buy in at the bottom of the range, so 86. So if we do go back down into the 86, 87,000 range, I think you can start to, nibble. But, it's had a big run. You have to admit it's had a big run. If it breaks through this 86,000, then that is a clear sign that we are going to give up a lot of the run that we just had. So I think anywhere in here, I think you can play for a potential breakout to the upside. The exact number here on this high was 93,495. So let's call that 93,500 would be the breakout here to the upside. Could you take a position if it broke out above this parabolic SAR? Yeah, that would be a decent position, but you'd need to have a breakout to really make any decent money. As I said, high bases, I like to do 2 things. I like to acquire down at the bottom end of the range, and I like to acquire on the breakouts. So that's where I'm looking at these numbers here on Bitcoin. Anka, what do you want to take a look at?
Hey, Rob, but the first thing I would like to take a look at is the pound yen. Again, I want to focus a little bit on yen crosses. If that rotation is taking place. Now, if you just look on the daily chart, you can see that we've been just consolidating. We had that big down, consolidated, exponential moving average, holding it there. And then here we are. Officially, this is where we call like the first break. We broke below the exponential moving average. We broke below the parabolic SAR. RSI is falling. I think there could be a more sort of a downside risk here. Again, after this big candle, we could see a bit of an inside candle, next week. So again, I love those patterns where, you get that little rally. I would love to get that little rally in some of these yen crosses and then, fade or, sell off on that rally. But right now it looks extended. I would love to see this base or have a bit of a bear rally. And again, if the equity market sort of, have a bit of a bounce on Monday, that would kind of coincide with it. But again, overall, I would love to use that as a selling opportunity. So the pound yen looks really good. Euro yen are right up there in that category as well, because I think there's just more relative weakness in these European currencies, which has held up really well so far. This year compared to where the Aussie and the Kiwi has been. So I think if these European currencies are the one that's going to weaken here, then Euro Yen also goes in the list as well. Again, looking for basis, looking for those levels to give us an opportunity. But this is a Friday, so we're gonna probably close at the lows of those candles. But yeah, those are the ones, Rob, I'm looking at. Again, CAD is another one that I'm paying attention to. Pound CAD, we can take a look at it. Just from a technical perspective, Pound CAD looks interesting because on the daily chart, this thing broke lower. The exponential moving average is going down. The parabolic star is going down. So like this is giving me signals. But now if I take a look at this CAD basket, it's not giving me that big buy signal yet. But I think if that sort of turns around, if this pullback get bought out, and if the inflation picks up, remember Bank of Canada is also one of those most aggressive on their dovish side. If they sort of get a bit of a better print on this inflation number, then I think we could see a bit of a reversal in the pound and in the CAD. In that case, pound CAD will be on my list. So these are the ones, Rob, that I'm watching going next week.
Let's wrap this up. Onken and I both have a risk-off sentiment for the first part of this last week. Yen crosses are going to be our focus at the first part of the week. We kind of hope we get a little bounce on Sunday, Monday that fades. That would be just a great setup for pound yen, euro yen, and look, even Aussie and Kiwi. Onken and I are both bearish those. They just don't have the velocity yet, but a lot of times velocity is kind of like whack-a-mole, where one is the clear one, and then that one mellows out, and then the next one gets hit and becomes the big volatility to the downside. So we are absolutely open to Aussie and Kiwi shorts against the yen as well. Everyone have a great weekend. Thanks for joining us. That is the Currency Room. Goodbye.